Welcome back to day 2 of the 2023 PASA International Payments Conference, where we are tackling the primary theme for today, which is designing with the end in mind. Now, our upcoming panel discussion follows the journey from cash to digital with deliberate minds. For this discussion, we welcome our moderator, Leo Lippis, the Chief Executive at Lippis Advisors. His panel include David Little, the Chief Commercial Officer at SBV Services, Pearl Khalegi, the Head of Currency Management Department at the South African Reserve Bank. And rounding off our panel discussion is Paul Harris, the Country Manager for South Africa at Flutterwave.
Hello, hello. Yes, there we go. Good afternoon, everybody, and welcome to our session here. Just after lunch on the second day, I'm very pleased to see so many people here. Usually the session after lunch is on the second day, is very thinly attended, but I'm glad to see a full room, and I'm also glad to see that the Pipc ushers are still doing their job of driving you into the only session going on right now. So that might be why the room is full. Very delighted actually to have 3 very nice panelists here to discuss with me the idea of the cash to digital journey, a deliberation of minds. And I think that one of the key themes that we've seen at the conference so far, right, is that for all the effort we as an industry put into the development of digital payment systems, the optimization of digital payments, and so forth, we sometimes forget about the oldest payment system of all, cash. It's declining in many countries around the world, but its use persists. And if you listen to the buzz, cash, if you listen to what's happening, what people are saying in the industry, cash will soon be replaced by digital wallets, cash will soon be replaced by this system, by that system, Lord knows what else, CBDCs or a myriad of other alternatives. In this session, what we're going to do is we're going to explore a little bit, I think, why people like cash, what digital alternatives are there or should be available, how to motivate people to use them, and the benefits it would bring to all the stakeholders involved. And I'm delighted to have a wide variety of views on the panel today as well. The way in which we're going to structure this, I'm going to give each one of the people here up on the stage with me an opportunity for up to sort of 3 or 4 minutes, maybe 5, to sort of expound on sort of what their ideas are about the questions that I've just posed. And then we've got a nice structured discussion. You'll also see on the screens behind me a QR code will come up at some point for the Slido and the Slido number. Please do feel free to ask questions at any time. I'll be monitoring them, and I'll interject them into the conversation here as appropriate. So why don't we start at the end then, with you, Paul.
Cheers. Thank you very much, and thank you to everyone for the invite. To the PASA team, thank you so much for organizing what I think we'll all agree is a world-class event. We thoroughly enjoyed ourselves, and from everyone in Flutterwave, I'd like to say thank you very much. Always strange when you come to a room full of mainly bankers with the name of Paul Harris. I've not seen so many disappointed people in one room to meet me. They're all expecting to meet a different Paul Harris. But my journey is slightly different to his one, although payments is in my blood. Lived 2 separate lives, really. One was a professional sporting career, which spanned 15 years. Managed to fool enough people for enough time playing cricket. And that's where my love for actually payments started. I managed to tour the subcontinent quite a bit in my time, and was fortunate enough to spend half my life in India. One of the big sponsors of Indian cricket is a company called Paytm. I'm sure we've all heard of Paytm. And I managed to spend a lot of time with their founder, first of all, and with their team. And at the time, they were really setting up shop in India. This was sort of in the early 2000s. And seeing what they could do in their environment really sparked my interest in payments. Learning something from scratch. Most sportsmen, we have to really struggle hard for all our brain cells. So I had to scrape the bottom of the barrel and learned really, really hard and understood, what makes payments work in an informal market. We're not there here yet by any stretch of the imagination in SA, but I see a lot of similarities between what I saw there and here. I'm hugely passionate, as I said, about payments, spent a lot of time in the last 15 years in it, from wallet to bank with I think my esteemed ex-colleagues, the Ozo crew, are somewhere around here. Great to see them. There they are there. How's it, guys? And now with Flutterwave, a very exciting payments company throughout Africa, in 31 countries, and we're passionate about moving money into Africa.
Very good. Thank you, Paul. We start with Pearl as well.
All right. Afternoon, and thank you for inviting me. In fact, when I got the invite, I thought Gita was pulling in something that I couldn't understand. I thought, Gita, why would you invite a cash person to a payments conference? But when I saw David, I thought, that's okay, because SBV is here. Just 2 or 3 points from my side. It is good that cash is here. Sometimes we have a discussion around our own areas and we completely forget about other areas. Cash and payments are the flip side of a coin. And I know people do not want to believe in that, but cash has been in here in operation for a very long time. And people say cash is a payment. Cash is more than a payment. Cash is store value. Cash is what we use when that safety net every time. And therefore, it must be viewed as that. We have seen in the past day and a half, or we've heard in the past day and a half, around the digital payment and the struggles or the challenges that it brings in. Fraud, cyber attacks. Cash has the same challenges, similar challenges, probably not cyber attack. We've got counterfeit, might be very low in South Africa, but we do have challenges. But there are also good attributes to both digital and cash. Cash still remains that trusted mode of payment, easy to use. David spoke about it earlier on, and the conveniency that it provides. So let's not forget about that. It can be phished. We've been talking about cyber attacks, and cash cannot be phished. Often when we talk about cash, people refer to tax evasion. If we look into South Africa, that market, that informal settlement that we talk about, that spaza shop is way below the tax bracket. So maybe our discussion needs to look at something different because they're not evading tax at all. In actual fact, we heard again yesterday about fraud being done in the digital format, being the number one in terms of the digital format. So I think that discussion needs to go in deeper rather than looking at the surface. The second thing I want to pause on is around the discussion that we had even earlier with Lerato, where she was asking about consumers. We sit here as regulators, we sit here as commercial banks, fintech companies, and we want to innovate. Who are we innovating for when we do not know the needs of the customers? We haven't involved them, they are not here, and we'll continue having these discussions on our own without ever hearing what is it that they want. So yes, we need to collaborate, and we are collaborating, but we are collaborating with ourselves, and we're not taking into consideration what is it that we want. The only 2 times we go back to consumers is one, when we want to do a survey, which is very good because we gather the information. But when that survey does not talk to what we want to hear, we change it because we already have our strategy together and we know we want to innovate and bring in more digital. So we need to also pause on that. The other, the second point in terms of when do we go to the consumers is after the innovation. So we sit in the room and we innovate. And after we innovate, we want to communicate how they should accept. We want to educate them about what we have innovated. And that, again, we need to take a step back and say, how do we take them along the journey so that they can tell us their own pain points around this? I'll pause there.
Very good. Thank you for your introductory comments, Pearl. And then, last but not least, let's turn to David.
Thank you, Leo. It's easy to lose sight of just how big the cash economy is within the SA context, and to lose sight of just how important and how prevalent it is within all communities across the country. When you think about 96% of consumers today use cash and digital interchangeably, depending on the situation that they're in, and that the customer self-selects at that point in time what is the most beneficial payment mechanism for them to use. And in a lot of the payment conversations we have today, we don't pay enough attention to that aspect, is that it is the consumer choice that will ultimately decide that migration journey from physical to digital, based on their needs and desires and what they want to achieve at the end of the day. If I think about just from a personal business context, we moved 1.7 trillion rand in physical cash on the roads last year. That's a significant quantum. I was outlining during COVID when the SARB ran into one or two challenges. We moved a single load of 2 billion rand worth of physical cash from Johannesburg, Pretoria on road. Whilst the numbers are large and the rest of it, and we didn't sleep for the night that it was being transported, it does give an indication into the complexity of the value chain that we deal. And there are stark similarities between the friction that exists within the digital payments world, but also in the physical payments. They are similar but not the same. We deal with the crime-related aspects of CIT incidents. We deal with the physical aspects of people carrying cash around. But likewise, on the payment side, there's a digital-related fraud and incidents that get perpetrated there. So there are a lot of similarities between the payment mechanisms. And I do think we can benefit, as per the presentation I made earlier, around much more collaboration, much more understanding of both sides of the physical and the digital world, that we can bring it together in a meaningful way that adds value in the lives of our consumers and customers. I had a number of good conversations today, in fact, with retailers who are in the room. And I think it's very important to understand the role that they play within the cash environment going forward as well. So as we think about the physical digital worlds, it's about solving customer problems and understanding what the customer problems are that we need to solve, and making sure that we don't force fit a digital solution into a physical world just because we would want to. It needs to make sense for the end user, the end consumer, or it will be rejected. And I think we are creating a lot of digital clutter currently. We need to push forward on the digital agenda to make sure we can broaden financial inclusion, that we can make an environment where more participants can enter into the formal financial system. But we need to do it on needs-based, values-based endeavor. We can't retrofit or force-fit our solutions into an environment that is not accepting. In terms of the role that physical cash plays, I think when you delve into the attitudes, needs, desires and behaviors of the general populace, it serves a much greater need than just fulfilling a payment or a purchase. It fills something a lot deeper. It enables them to live out the values that they prescribe to. So one of the cash segments talks to being the gifter, the cash status. They derive status from transacting in cash. They derive status by handing someone 100 rand in their local community that can then go on and use that 100 rand to live out their lives. They don't see that status in a purple card, a black card, a digital wallet. They don't see status being attached to that. It's the physical randella that allows them that status and that attaches status to. So cash has a fundamental role in society far beyond just being a means of payment. It is a lot deeper, a lot more intrinsic, a lot more embedded in the psyche of the general populace. I'd argue the same is true for the retailers and the merchants, Leo, where they too fund a lot of their business activities at a micro level out in the SME world on cash. And cash plays a fundamental role in making sure that that ecosystem works effectively. And the link between the retailer or the merchant, the SMME, right the way through to the large merchants and retailers are sitting in this room, they care about that. They care about the role that cash plays in the individual's lives, to the extent that if the digital payment solution doesn't work, they'll put it to one side and focus on cash. So the importance of being here and having this conversation, I think, is to forge a closer alignment between the physical and digital worlds, so that we can really get to the heart of solving problems together and bringing solutions to market where we solve the physical and digital divides and create a more sustainable payments ecosystem going forward. Thanks, Leon.
Very good. Thank you, David. So I think actually getting all three of these statements out at the beginning has been very helpful, I think, for framing the conversation and for framing the sorts of topics that I think are going to come up over the next 45 minutes or so. And so it seems to me that if I were to take what I just heard and divide it into three major areas. One is about the problem, like what is the problem we're actually trying to solve. Second area is what are the solutions that we actually need to come forward with. Yeah? And the third major area is really about, well, how do we get from here to there, right? So let me start, let's take a few minutes, I think, each and begin exploring each one of those three main topic areas. So I guess my first question is, what are the use cases we're solving for? In other words, where are there problems today that need solutions?
I think I'll jump in there if you don't mind. I think the informal sector is the one. I think that is the main area of, I wouldn't say concern, but that's where most of the cash is. And let's say underbanked. I don't think there's anything as unbanked these days. I think generally, we're highly banked population, but it's more of a postbox in and out for cash. It reminds me, one of the first businesses that I was involved in was a wallet for students. And I believe firmly this is the way you get rid of cash. Is if you are taking 100 Rand and making it 10, or even making it 98, you're struggling to win this battle, right? Most people don't want to pay it. People will travel sort of large distances for a discount. Why are they taking their 100 Rand cash and getting 90 back or 95 back? I think that's the first issue. We ran a wallet for students where we dispersed large amounts of money directly to their phones. They access it on USSD, and they had an option to withdraw at a retailer. At the retailer, it was 10 Rand to withdraw, and in the beginning, because there was a trust factor, everyone withdrew. So 98% of the money was withdrawn. If they spent on the platform, it was free. They could spend at 16,000 merchants. It was all on the website. They can go have a look. We weren't seeing anyone spending, and our business model was you need to spend so we can charge the merchants, so we can make revenue. So we thought, well, what are we going to do? Went to the merchants, and this way I think that the key is to changing cash, is why not make the 100 Rand 110 Rand? So we thought, okay, well, how are we going to do this? We went to the retailers, we went to the fast food merchants, and we actually even went to some of the informal merchants and said, what would you be prepared to give the students back if they came and shopped with you? A few of the big retailers, their margins are small. I said, well, students, we'll give them 5% back. Other retailers, well, we want to compete, we'll do 10. One of the fast food chains actually gave 15. We saw it go from 11% spend to 91% spend in 2 months. So it just shows you the difference of getting cash out because you're actually getting more for your money. A small use case to show what the power is of changing someone's mentality and what people think is value. I think it's been the biggest failure in wallets in South Africa. Wallets haven't been a success in South Africa at all, whereas other parts of Africa, they've been a huge success. Is the cost factor, is that why would I put my money into this? What's the use case for me? The fact that we've got old ladies sitting on the side of outside a post office for 24 hours, sometimes longer, to receive a grant is disgusting, in my opinion. It shouldn't happen. Not in this day and age where you can get sent your money directly to your phone, and connectivity is becoming less and less of an issue. It can be on USSD, it can be reverse billed, it can be free. So I think that's also one way to change the narrative, is say, a large portion of the cash would be taken off the streets if it was dispersed in the correct way. And then changing behavior. And changing behavior, in my opinion, is adding some sort of loyalty to it, working together with regulators, first of all, with retailers. The retailers play a huge role in giving something back. Yes, maybe eating the margins slightly, but bringing in more and more feet into the retail stores. And moving people away from this idea that the cash is my only option.
Very good. Anyone else?
I'll respond to that from two perspectives. So one being a consumer. Assume that I am from Ekunu or Mveso, where Mandela is from, and there's no connection whatsoever. So for me, cash is convenient. easy to transact with, and I trust it. I actually trust my mattress where I put my cash under, and I do not trust the bank. So it's easy for me to transact using cash. Over and above that, what I do with my cash is that there's a vendor around the corner where I buy potatoes and tomatoes. And there I can negotiate. If this person tells me that a packet of tomato is 20 rand, and I'm good with haggling, I can actually get it for 15 rands. So I've got 5 rands in my pocket, and that is what happens with cash. So I'm not sure what is the use case, because as a consumer, for me, it is convenient. I'll then respond as a central banker, given that I work for the Reserve Bank. The thing that we are, use case that we are resolving for is what David touched on earlier, and that's the loss of lives that we see on the road. To date, 493 heists have happened to date from the beginning of the year in South Africa. And that is very high stats, and a lot of people have died because of that. So how do we make that efficient without saying that it must be displaced? We need to have a discussion around the efficiency of the entire value chain without displacing it, rather making it complementary to the digital world. Yesterday, I think Herman was the one that said, let's keep doing the old things that we do, even if innovation is coming. So we continue doing what we know works, and we continue to innovate on the other hand. Because that we used to do and that kept us going is critically important. So cash was there, still critical for some of the population that we have in South Africa. So let's keep on ensuring that it's available, it's accessible, but then on the other hand, let's make sure that we innovate so that we improve our economy.
Okay. Do you want to have the final word on this one, David? So what problem are we trying to solve?
So I think the use cases that we're seeing coming through the system are relatively one-dimensional, where we're trying to solve for what we believe the problems are. I think we need to get to the front end and start asking a lot more around the consumer. What are the use cases that we should be solving for? Taking solutions that we've designed to market rather than asking market what solutions we should design for will lead to very different outcomes. I think the key one we need to solve for is at the SMME level. I support what Paul was saying earlier there around that market is definitely ripe for innovation and use case sort of design around how do we solve the physical to digital. I think the other thing that we can't lose sight of is that there is a segment of the economy, predominantly in the agricultural sector, that we call the cash functional segment. They are calling out for a digital solution and are ready to migrate. We haven't yet as an industry understood that level of detail around what the customer requires in order to design solutions effectively. Mm-hmm. So I think we are working a lot of use cases, but we're also working on them in different pockets. And when you put it all together, as I mentioned, it does create an element of digital clutter. And when you walk into the retail store and you've got 4 QR codes and a number of other apps and wallets available to you, those use cases are so plentiful that it becomes confusing. So I definitely think we need to make sure we're a lot clearer around what is that roadmap for solutions we want to take to market individually, but also collectively, that we don't have an adverse impact on society at large by creating more confusion, more complexity, more challenges in the front line through what we are trying to solve for. I think we need to do a lot more use cases around the financial inclusion aspect to say how do we design solutions that not only enable participation into the digital sort of payments world, but that add more value to financial inclusion over time, educational aspects, broadening, deepening of financial products, but servicing their needs. So I think there's a lot more, Leo, that can be done in that regard. But I do caution that in our rush to design use cases and so on, we need to make sure we are engaging the user of that solution that we are designing, and make sure that we've designed in what they need. Last point is, if you look at the feedback from the research as well, is it shows that customers will self-select elements of that use case that you've designed that suit their needs. So the most cash-reliant segments of the economy have decided that they will use an e-wallet, 49% of them, they will use an e-wallet to solve the transport issues. They don't want anything else to solve their payment preference or the deposit options, but they'll use it for that specific piece. So that's the power of making sure we get the consumer feedback into what are we solving for.
Okay, very good. So I'd like to come back to the solutions topic in just a moment. I want to focus for one more, I want to circle back around to a topic that I think Paul focused on more in his comments, which is cost. The cost to the end user or the cost to various parties along the chain. And one of the things, of course, that the digital payments, generally speaking, right, those that have been successful have been free to use for the consumer as well. Think of cards, for example, where merchants bear the cost. Think of, and those where consumers have had to bear the cost, right, have been far less successful. And exactly the way in which you described, that as soon as you give the consumers an incentive to change their behavior, in fact, that change can happen very, very quickly. So I guess that maybe we could spend a few minutes talking then about what's the cost of cash in comparison to other transactions, and what can be done perhaps to reduce that, or how can we adjust those numbers so that we shape consumer behavior differently?
Sure. I think firstly, I agree with David in terms of speaking to the consumers and understanding the problem first. Yeah. I think being more empathetic and understanding that your world might not be someone else's and solving their problem. The second piece to it is actually commercializing that. And I think that's the piece that we haven't got right in terms of cash. Is you remove cash, but I mean, at the end of the day, especially us fintechs, I'm sure a few will smile, but generally your CEO or the boss is asking for revenue, right? He's got shareholders that he has to please. Most of the big fintechs have raised astronomical amounts of money, so they need to grow at ridiculous rates per year. So finding a way to marry solving problems and changing business models. I forget there was a gentleman that spoke about this yesterday, about how business models need to change and ideas around how you make money, because at the end of the day, we're not in this for hugs and high fives. We're actually in this to make money. So, and solving problems while making money, I think we've got to look at the way cash works, dealing with regulators first of all. As I mentioned, retailers I think play a huge role in this. I don't think I've withdrawn, I don't withdraw often, but I haven't withdrawn from an ATM in 5 years. I withdraw from a retailer. If I go into any retailer, I'll withdraw there. When I'm buying whatever I'm buying, whatever groceries I'm buying, I'll withdraw there. It's easier for me, it's quicker, and it's free. Well, it's not free for them, it's free for me. Someone's paying. So to my point, I think that we need to have a look at business models, a look at how the cost of cash, what it takes to get it off the street, because that's, at the end of the day, that is the cost. Someone's paying for it. I'm sure David, I was listening to him before we were on stage. Fascinating stuff, what they have to deal with. They think us fintech guys are cowboys, but I tell you what, I think you guys are doing a fantastic job and a huge need in society, and your drivers, in my opinion, are heroes. But back to my point, I think finding a way to make money and solving problems. And again, I think it has to be free for the consumer. So it's either the retailer or another that's going to pick up.
But isn't it also the case that the entire cost of cash is not visible to the consumer? So of the 493 heists of which Pearl spoke, right, the consumer doesn't actually bear those costs in any way at all. So how do we actually square this up?
I think it's the perception that cash is free. And it is truly a perception, because it's not free. The movement that David and Paul have spoken about is costing us a whole lot. In South Africa, we've got a very efficient infrastructure, and we also need to maintain that infrastructure. So maintenance of that is also very costly. I've spoken about loss of lives, and that we can't even quantify. So that's a whole lot of costs that we are building in, and that's why we're talking about cash. So often we think, or the consumers have the perception that it is free. It's actually not free. And I think for me, that's why it's important to have a discussion with cash payments, fintech people in one room, so that whatever collaboration that we bring about, whatever solution we think about, we have taken into consideration all the aspects and not just working in silo as either payments or fintech or cash people, but having that global view of what is going on.
Very interesting. Very interesting. Okay. You want to add anything to that, David? Yeah.
Thanks. Yeah, the cost of the cash value chain is significant, and what amplifies that cost is you're not actually splitting the cost of that infrastructure over every cash transaction. You're only splitting the cost of the cash infrastructure over the transactions for which you either accept or dispense. So when you look at it, average cost per transaction, if you had to take into account all cash transactions based on the cost, you might arrive at a different outcome. That being said, cost of cash for the consumer is cheap, right? So whether the consumer receives it as a gift or whatever means, they can use it as many times as they want. So from a consumer lens, as Bill says, you don't often see the cost of cash. It's generally a free transaction. But that cost is borne somewhere, and that cost is borne in the back-end supply chain. And I must mention that there's a fantastic collaborative environment within the cash space under the leadership of Pearl. From the SARB perspective, we've got Baza, Kumaran and the team, as well as all the commercial banks involved in making sure that we can collaborate effectively to create structural ways of work that can reduce the cost of cash. We're in the final throes of setting up an independent administrator within the BankServe environment to administer the stock and flow of cash across the entire ecosystem. So there's definitely a great industry collaboration to achieve a lower cost of cash. But reality is it's a frictionful process, it's a manual process, and therefore does leak a lot of cost into it. I think, and then lastly, just with regards to the cost of cash, it was quite fascinating. We spent some time last year actually at a cash conference in Madrid, and a number of presentations were led by central banks. And the Bundesbank was very forthright in their opinion that actually a digital transaction is more costly than a physical transaction. And the way they justified that through a number of detailed calculations was consumer time spent at till. I don't know when last you walked up and tap and went. Tap? Are you sure? Yeah, sure. Which account? Oh, that account. Any tip? No tip. By the time you've added all that time in to press 6 buttons, you wasted time and effort there. And they quantified that time and effort back to rand percentage. So there's definitely a growing global sentiment around the cost of digital as well as the cost of cash. So we need to consider them side by side.
Very interesting. So what I'd like to do now is actually turn our attention, I think, a little bit toward solutions. Yeah? I've had a number of questions come in as well. I'll get to some of those in a moment. I'd like to think about, when we think about the hype that we generally hear across the payments industry more broadly, we often hear about digital wallets, right, which have come up a number of times over the last day and a half here at the conference. CBDCs, while they haven't been a major topic here at the conference, certainly you must have been living under a rock for the last several years if you haven't been hearing about them. Real-time payments, right, where we have a second-generation real-time payment system that was introduced here in South Africa earlier this year, right, and so on and so forth. The question I have for you is, do we think that in the future these will simply serve different use cases from cash and that they will exist side by side? Or should we actually collaboratively as an industry be choosing a single or a selection of these paths, right, for people to use?
Yeah, look, I think you're right. I think you do need a selection. I think we need to collaborate. I don't think any one, team can come up with all the answers themselves. I don't think the fintechers can. Certainly, I don't think the banks can. And the regulator can't do it themselves either. So I think it's everyone coming together, finding a business model that works for everybody, so that everyone makes money, and then you're solving real world actual problems. I don't think we're going to get rid of cash in a hurry. If it happens, I know in the digital world things happen quickly, but in terms of connectivity, I think that's still an issue. I agree. That it is still an issue in certain parts of Africa, and I see sort of Africa as a whole. You have a lot of migrant workers. That's one area where you could probably have a look at. Around Africa, you've got a lot of migrant workers that get paid in cash. They need to send money home. That's one area where I think regulators can come into it and say, look, how do we structure it where it's easier to move money into Africa? It's often easier to move money from the US or Europe into Africa than it is into Africa, which is, and it's way more expensive. You've got migrant workers that are getting charged up to 12% for a transaction. It's highway robbery. So in that area, I think that from a social grants perspective, great way to start getting rid of cash. by distributing it digitally and giving back.
So I guess maybe no, I'm gonna interject for a moment, and I
Sure.
guess it's the right way, and this leads me to one of the questions which I'll read, but I'm gonna actually take the question, I'm gonna broaden it a little. I'll read it first, then we're gonna broaden the question a little bit. So somebody asks, Will, whoever Will is, thank you very much for your question. Does anyone envisage taxis accepting digital card payments in the next 10 years to allow South Africans to be less reliant on cash day to day and to possibly increase SARS revenue from the providers of transportation? So there's a lot packed into that question. I guess what I want to do is broaden it a bit and say, okay, do we need to start solving for specific use cases like taxis, like remittances, right, that you just brought up, Paul? And we could go down the list of point of sale payments and so on and so forth. Do we need to have specific solutions aimed at these, okay? Or do we think that there's a better approach that says what we need is a solution like cash, right, which can be used in any situation we choose?
Look, I think in any infrastructure, eventually you get to where there's a few players in the game. I think there will be a few that will go out and try, but the successful ones will be, I think maybe 2, 3 max. You see it in China, you see it in India. Although in India there's a new unicorn around every corner, there's only a few that have really done incredibly well. So I think that solving the problem is the first part of answering that question. Is there, to my point, is there a solve for SASSA grants? Yes, there is, in my opinion, totally. Is there a solve for remitting money cross-border? I think from a peer-to-peer perspective, there should be. I think there should be relaxations in legislation to allow people to move lower amounts of money cross-border easier. I think that'll help the situation a lot. So yes, to answer your question, I think that it's very use case specific, but I don't think there'll be 10, 15, 20 players in the game.
Right, yeah.
I think a universal solution is ideal, but not possible. The use cases, as Paul has said, are different, and it's okay to solve for each use case as it appears. The interesting question around taxi drivers, maybe let me explain what happens with taxi drivers, is that there's an owner who's got a quota for a day. So if you are moving from Pretoria to Johannesburg, he'll give you 2,000 is what you need to check in on a day-to-day basis. So what the driver does is that he does frequent number of trips between Pretoria and Johannesburg, hoping to get that 2,000. But over and above that, he does 2 or 3 additional trips, which is money that he puts in his pocket. And that's why we get resistance in terms of the taxi drivers, because you are killing the income for that taxi driver. Yes, he's got a quota, and he does give in on every evening the 2,000 that was requested by the owner, but because he does that additional 2, 3 trips to feed their own children at home, if you then put it on a digital platform, that person cannot access that additional 500 that they made for the day. So that's the challenge with the taxi driver. And obviously the solution is amongst all of you here, fintech, commercial banks, so that we can think of how are we going to address that.
It's the same use case as I had before, sorry to interject, was with the students. We had the students, and the only time the students in that, I said was 91%. The other 9% was to withdraw cash for taxi, for travel. So it was the only piece that we couldn't solve for was taxi. Is we first of all didn't have the manpower to sign up every taxi, which is difficult, and there was resistance from first of all the students and the taxi drivers to take a digital payment.
And there would be from I suspect, other parts of the society as well. So sure. I guess maybe that's the question, which is, despite all of our best efforts, where will cash persist, right, in 10, 20, 30 years?
So, to add a perspective, if it's all right on the taxi, I'm not sure a digital use case to solve for taxis is really what's needed. I'd argue that we've already got solutions that can service that. Look at the Gautrain tap and go system that works pretty well. Preloaded card, get in, tap and move, right? So I'm not convinced that designing a digital solution for a taxi environment is really what we need to solve for to reduce the prevalence of cash on the taxi. I think it's a higher societal sort of engagement that potentially needs to happen around, the rationale behind, well, why are we not, moving to digital, the tracking, the anonymity, and the rest of it. So I think there's other aspects related to solving that problem that need to be looked at. I'd argue that, a couple of propeller heads in a room for a weekend can come up with a solution that will solve that pretty quickly. And I'd also argue we've already got those solutions in place. So a use case to solve it doesn't seem like it's going to add a lot of value outside of tackling the real issue is why are we avoiding going digital? And I think that's really where we need to focus. The other component around that is, as we look at solving that problem, what Pearl mentions there is so valuable is that we can't just look at the apparent problem. We need to look past that. We need to look at not just solving for the taxi transport issue, which is, by the way, the number one use of cash in the entire economy is for transport, whether it's parking machines, taxis, or others. We need to look beyond the obvious to design a solution that actually supports and services the taxi driver as well as the commuter. And until we can find that little symbiotic relationship between all of those participants for that service, we're not going to be successful in solving or migrating sufficiently to the digital solution that we all would like them to move over to.
Well, this is very interesting. So, because one of the key things here, I think, is about aligning the interests of the different parties involved, right? So, the taxi situation that Pearl described and that came up in the question, right? So, it seems to me that we probably have solutions in place for this already. You could have a digital solution for paying taxi fares, and they use something like once the driver's reached his quota, right, and so he displays a different QR code for making the payment instead of the taxi company's QR code, right? So you could actually. There's a very easy solution for that I think in some ways would be available. The real issue is how do we change people's behavior, both the driver and the consumer in this case. So I guess one of the questions I wanted to ask us about and is that how is it that we can, this comes up in one of the questions here as well, we've talked a little bit about the pain points that merchants face, that in this case taxi drivers, that retailers face, and so on. What are some of the pain points for consumers that we actually need to be solving for? And what sorts of solutions can we envision coming up for that?
I think it's that age-old question, same as David brought up, is understanding what those pain points are with cash.
Yeah.
I think in the digital world, it's how do you buy something online with cash? You can't. It isn't possible unless you use some smart vouchering systems out there, which there are, where you can buy a voucher and trade online. So from a pure digital trading point of view, difficult to do with cash. And then the various use cases we've used, there are solutions to them, and I think it was a brilliant point that David brought up. Is the world to change? It depends on who you ask with cash. Do you want to get rid of cash? If you ask the fintech, I'm going to go sure, because all I see is another product we can bring out. When you're asking, if you ask a taxi driver, for example, to the point, it's like, no, I don't want to get rid of cash. It's what I trade with. If you ask, maybe some of the consumers that use taxis would prefer to tap and go, but I would imagine most of them would say they're happy with cash. So, I still think it's that, how do you incentivize that change? Why would I do it? I always ask whenever someone comes up with a new, form of payment, why would I use it? I'm trying to understand why would I actually take my money and put it into this vehicle that you have and then go out and use it. Ease of use is one. People will move for ease of use. The other one is, as I mentioned before, is giving someone 110 instead of 100. And I think those are the two things that would change someone's behavior. I keep going back to the social grant issue because I think it's a huge issue in this country. And ease of use for people is receiving your money on your couch. You don't have to go anywhere. You can buy airtime online. Yes, eventually you're going to have to go out and shop, but if you can sign up in formals, you can go and you can shop there. There'll be an element of cash there still, but it'll get a large portion of it off. Do I have all the answers? 100% no, but that's just my sort of views on how I would start solving the problem.
Just to add on what Paul said, simplicity. Simplicity is important. What we're seeing now is a proliferation of all these digital platforms, and they're intimidating. I think one of the speakers said earlier on, they're intimidating, you become overwhelmed, you don't know which one to go to. So one of the important things that we need to do is to keep it simple, so that acceptance is much easier and people feel that they can communicate with the app. The second thing is what Normalizer said yesterday around language. In South Africa, language is a barrier, and we shouldn't underestimate that. So everything that is written in English, and I'm from the rural areas of Venda, I want something written in Chivenda so that I can understand and communicate, because you're talking about money here. Money is very important to people. So if you want to do that, do something that is simple so that I can understand it and engage with it.
Very good. I'd like to take the remaining 15 minutes or so that we have left and sort of move to a discussion of how do we accomplish this, right? So, and because we've talked a little bit, I think, about why it could be worthwhile, under what conditions it would be worthwhile. I shouldn't drop that. Under what conditions it should be worthwhile, and what problems it is we're trying to solve. But I guess some of the question is, how do we actually get there from here? So I guess one question would be, what does responsible migration look like, right? So one of the interesting things that came out of one of the panels this morning, I think, there was a lady from the FSCA commented on the research they had done, and that the number one barrier for people beginning to pay using digital transactions is actually using the app for the first time, right? And once they use it, the highest correlation was between what makes people use digital payments as having used them before, yeah? So the question is, how do we actually encourage people to use them for the first time, and in what contexts? So I guess maybe the question is, what does responsible migration look like? Can we start with you, David?
Yeah. I think responsible migration starts with understanding the consumer and understanding who within society we need to be worried about in the migration journey, and who we can be less worried about, and then who we don't need to worry about. And I think by starting off with the understanding of that as a basis, it'll absolutely guide us in terms of responsible migration. So globally, we see access to cash initiatives kicking off left, right, and center. The migration journey has swung the pendulum too far, moving and forcing people over to digital alternatives, etc. And I really think within the South African context, we've got the ability to prohibit that from happening. We've done quite a bit of research, as you mentioned. It's been displayed today and at other forums as well, is if we can actively quantify that segment of the population that will continue to use cash for the foreseeable future, and make sure that we make cash available and keep cash available for that segment of the population, I think that's a good starting place. Thereafter, what we do know is that you cannot force a migration. So if you force a migration, it elicits an extremely emotional response, and it can have an adverse impact. And most certainly you will leave many behind. So the migration journey has got to be very inclusive. It's got to be one where there's consultation, there's got to be one where there's education in many different languages, which is a very important point that you mentioned, is that you need to make sure that there's an understanding for the rationale for change before you can actually step off on that journey. And then I think it's about making sure that you are absolutely sure that you have the right solutions with which to move the population onto. So you can't migrate someone to something that they don't want, they don't like, they don't understand, or that doesn't service their needs or fulfill their desires. You have to make sure that those solutions that you have in place are the right ones. And I still think we've got a journey to travel on that one. Judging by the cash prevalence within our economy, we've still got work to do to design those solutions that actually make that migration journey almost self-selected rather than forced. We have seen models globally as well where it has been forced. Brazil was one of those such examples where regulators stepped in and said, that's it. I'm not quite sure that is a South African sort of way of operating, and Pearl, you can correct me if I'm wrong there. I rather think it's an inclusionary approach where we can migrate collectively and sustainably the population over to more digital in future. One thing I do want to finish off on that point, Leo, is it is an absolute imperative for us to do as an industry. We all collectively need to make sure that we can digitize those sections of the economy that need to and want to be digitized. And I think by working together to understand the physical a lot more, it'll help us design those solutions that can actually sustainably migrate. Because the last thing you really want in any migration journey is that we default back to where we were. Because you don't get many opportunities to digitally migrate someone. 90% of most apps nowadays get used once and left on your phone. And we need to be cognizant of that in this journey to migrate to digital platforms, is that it's not a once and done. It needs to be sustainable, needs to be sticky, and therefore start from the base of understanding and move through that journey to make sure that at the end of the day, once it's done, it's sustainable and is long-lasting.
Pearl, do you want to?
Just to add on to David, I think for me, time, and I know it's a controversial thing, so let me try and explain why I'm saying time. Trust is built over time. So when you're introducing something new, allow the consumers time to take it in and understand what you're talking about. So that is important, in addition to what David has said. Allow time. The second thing is, it's okay if you do it in chunks, because very often we want the adaptation to be all the market, everybody at the same time. We need to take a step back and say, if we get 5 people today onto the system, it's okay. Then tomorrow we will move and hope to increase that number, because it does take time. So it's okay to just move in smaller chunks rather than aim for everybody to be on the platform at the same time.
Okay. I guess one question that you've began alluding to, David, and I think this is an important issue, and this is the one where Pearl will shake your head, regulation, no. Right? We've seen certain countries that have taken a relatively heavy-handed approach to forcing this migration. Brazil is one, India is another with its demonetization 5-6 years ago, yeah. Zimbabwe, okay, was one of the questions we had from the from the audience as well. They became a digital economy by removing cash from the ecosystem. Why not reduce the cash in circulation and increase different digital payment methods apart from cards, such as mobile money and vouchers? Would this work? So, without getting into the specifics of that particular question, right? I guess I want to ask again, take the question we got from the audience and broaden it a little more, which is, what's the role of public policy, right? Even if we say, okay, it's not necessarily heavy-handed regulation, but what's the role of public policy in encouraging digital payments and migration away from cash for the particular uses? We've talked about some of the economic factors of ease of use, lower cost, and so on and so forth, right? Trust, okay? What role does public policy play in all of this?
I want to go back to what the Deputy Governor said. All the difficult questions must go to Tim.
And Tim is still here.
Policy can do 2 things. It can be destructive, and not really destructive, but negative and positive way. Positive way in that it holds people accountable, it increases internal controls, and at least we know the framework that we are operating under. The negative part of it is that it increases workload for companies, obviously, and they're not looking forward to it. Adaptation of new practices take time, which is something that I've spoken about as well. So it's very important to have policy that talks to the issues that are happening. And also, one thing that is important is to be able to take a step back and see if that policy is not working. And I think we probably as central banks are scared to do that. Once we put out a policy there and we can see that it's not working, it is gospel truth and we cannot go back. So the ability to take a step back and look at something that's not working and rethink it and come up with a different policy will help us to go a long way.
Okay. Yes, David.
Yeah, I think Pearl's spot on. I think the other key aspect is, from a regulatory perspective, that level of engagement. You know, we are fortunate enough within the cash environment to have a very engaging department within the Reserve Bank, where we sit down and we debate a lot of the issues that do crop up, and And just that willingness to want to engage and understand things around the industry that can really help in policy setting and so on and so forth is that level of engagement from the regulator needs to be at a heightened level. And understanding, yes, you must keep your distance and make sure that we don't run errand, but that level of engagement is something that we really do enjoy within the cash space. And I certainly think going forward with the new structures that Geet outlined yesterday with the PIB and the rest of it, I really think it is going to make for a lot more regulatory frameworks that get put out there that are more inclusive, that are more participatory, and that also add value. So I think it's about the level of engagement that's very important as well.
I would tend to agree with that. I think, look, I'm speaking from a fintech perspective. We tend to have the reputation of asking for forgiveness rather than permission. It's not always the case, but it's supposed to push boundaries, and I think sometimes, especially in South Africa, it's overregulated. Especially in certain industries. I think certainly the movement of money, as I mentioned earlier, is far too overregulated, especially for lower amounts. I do understand that in this digital world, you got to be careful of money laundering, and there are dubious people out there that are going to use it for some of the most heinous crimes you can get these days. So you got to be careful. But in lower transactions to help people move money, I think we need to have a look at how we do that. Get into the room with the regulators, help with policy. Have the conversations, and sometimes those will be heated and hard. And one team's not always going to get what they want, and neither will the other. But I think there's got to be that dialogue. I think that in the past there hasn't been. It's been more, dictated rather than a collaborative effort between people that are really trying to make a difference, companies that are trying to make a difference to ordinary African lives. Yes, again, the business model is important, but I think working together to find the best way to do it for certain use cases would be better than being dictated to.
Okay, and then maybe as a final question here, I mean, and then we'll as a final question, I think we've got about 4 or 5 minutes left. What does it take actually to make that collaboration happen, right? Because it seems to me that that there are certain policy levers that could be pulled, okay, to make things happen that can help align the interests of the taxi driver. And this again, one of the questions that came up: who doesn't want to have to buy a terminal to accept payments? Probably doesn't need to because he or she has a mobile phone, right? There also are the cost of digital payments could be reduced through public policy initiatives, through public-private partnerships and the like. But the question is, what would it take, to actually get us to the point where that collaboration gets put into place so that, in David's words, it's not an either-or choice, it's an and choice that solves for different types of cases, that gives consumers the type of choice and at the same time the types of incentives that David was talking about, and while at the same time having public policy encourage everything in the right direction. What does it take for us to get from where we are now, where we seem to be more at odds with each other, and where the incentives don't appear to be aligned, to where those incentives become much more aligned than they are today? Who wants to tackle that one?
I don't mind taking it. I think from a Flutterwave perspective, it certainly has already happened in certain markets. If you look at Nigeria, for example, where we founded, talking to the regulator there, we have regular meetings with them. Recently launched a new product with them for trying to get rid of parallel rates in country. A product called Swap, which allows us to move money from NGN to US dollars, which is backed by the Reserve Bank. So that conversation has been going. I think a lot more can be done, and maybe that must fall on me in South Africa to have these conversations with the regulators. I know that we have them generally with the banks and with the card networks, and agreed, more needs to be done from our side, certainly, to engage with the regulators. And I think it'll happen, it might, build, that trust needs to be built, whereas we're actually on the same team. We're trying to solve problems together. We're not actually against each other. There needs to be laws, there needs to be regulation. We understand that we want to be regulated, but it needs to be sort of constructive.
I think it will take willing parties. As David has said, we've got structures that we've put together so that we can have these open discussions. And it's important to have the open discussions and disagree in these meetings so that we can come up with a solution. and put away probably for a minute ahead of a regulator, put away the vested interest that commercial banks have or CITs, and have an honest discussion about what is on the table. And we are seeing that in the cash space, and maybe we need to just intensify it more so that we can come up with solutions.
Okay. I'll give you the last word then, David. Then we'll wrap things up.
Yeah, I think the structure that we're moving towards from a broader payments industry actually creates a space for that. I definitely feel that under the regulatory frameworks that will now be put in place, you can create different schemes that are self-managed. You can invite individuals into those schemes that could add value to that scheme. And I certainly think that there's opportunity for us to consider how to cash play a role as a scheme. Do we have broader collaboration, or do we fit into other areas where we can add value? So I definitely think it's about working within the existing structures as was outlined, making sure that we are there to provide a perspective, make sure that we are there to give a view. I think that's definitely the one way. I think the other way, and I keep referencing it, is let's put the customer in the room, right? Let's actually start to engage with the customer and to ask them exactly what we need to solve for, and I think that'll add a lot more value. We've got to look at it not customer from our own lens, but customer in terms of end user in more generic context. And I think the more we can do that, the more we can force conversations to saying, guys, let's solve a real need out there, not a need of our own. We have to solve both, but we have to solve for both. But I think it's more about let's solve for the customer in those conversations that we have.
Very good. Thank you. Thank you to all of you here on the stage, to Paul, to Pearl, and to David. Thank you to PASA for having us here today, and thank you all to you for staying with us. So I've noticed it's been a very happy notice. There haven't been a lot of people walking out, by the way. So we've done our job, I think. And I think this has been a very interesting discussion about the cash to digital journey. And I invite you to stick around for the next session in this room. But as well, I just wanted to say again one more time, thank you for, I think, what's been a really vigorous discussion of the issues involved. Enjoy the rest of the conference, enjoy the rest of the afternoon, and please join me in giving our panelists a round of applause. Thank you.